All right, you're in the deal room by your friends at The Endgame, Israel's tech M&A podcast. If you're new here, we're all about Israeli tech M&A. I'm Sophia Tupolev here with Zeevi Michel, co-hosting this fresh little segment. As you may know, our main show brings Israel's most interesting deal team shadow players out of the shadows and onto your playlist. We're now doing a monthly recap here of the deals going on in Israeli tech M&A. So if you're a merger nerd or just a founder with an endgame, join us for this quick chat. Zeevi, talk us through what we're seeing in the first 5 months of 2025 deal making.
If you're listening to this show, it's May 2025. So we're actually trying to recap the last 5 months of tech M&As here in Israel. And as you can see in the screen, I don't know, first time I saw this slide, when Sophie showed it to me, I was impressed by how
Beautiful
accurate
it
we
is.
were. Yeah, or also beautiful, but also how accurate we were during our 9, 10 episodes so far of the end game. We're talking about different types of acquisitions, different buyers, prices, obviously, different results, but also different structures, etc. So we'll try and touch upon several of the deals you can see here on the screen to give you some flavor of the different types of acquisitions that happened in the last 5 months. We can start very quickly, but something that we've noticed immediately, which is you have a very nice blend of buyers. So you can see scale-ups buying companies. You can see large-scale strategics buying companies like Google, Munich Re. You could see PEs buying companies. So these are all the three different buckets that we were discussing. And here you could see a very nice representation of that. Second thing that you could see is also the prices, slightly more the maturity of companies. There is some companies here that have been around for 10 years and above and got acquired. And then you could see some companies here that are less than 24 months in existence. So yet again, you see different journeys or different lenses of journeys. Overall, you can also see the distribution. While the distribution is pretty consistent with what we know and we saw in the past, although the media and the tech news is always raving about, large scale acquisitions, billions of dollars, the reality is majority of deals in tech in M&A is less than 100 million. Even if we want to be more specific, it's less than 50 million in the majority of the times. Yet again, you can see here across the last 5 months a nice variety of the different sizes of deals. So to me, this slide basically represents some kind of a culmination of arriving to what we've talked about in all the episodes. There's one thing, I don't know, let's try and take an example. So for instance, Next Insurance being acquired by Munich Re in March 2025. The news reported the deal to be at 2.5 billion or something like this. 2.6, thank you. Who cares about $100 million here or there? But okay, I agree.
I mean, the entire last deal that I worked on was $100 million. Let's put that in perspective for a second. And most of these deals are under 200. So this is like a rounding error on that deal. So the majority of acquisitions. Sorry, you were saying.
And what's interesting to point out about this deal is actually 2 points. First of all, the acquirer, Munich Re, being one of the world's largest reinsurers, but more importantly, it's a European player. So if you remember in different episodes, we're also talking about the geographical distribution and where does the buyers come from. Well, obviously Israel, the majority of the acquirers are US based. And here we see a very good example of a large, giant European player tapping into the Israeli market and Israeli US based market and acquiring Next Insurance. Perhaps a second point to discuss about this, at least according to reports, the last known round that Next Insurance did somewhere, I don't know, 18 months ago was at about $4 billion. So therefore, the question asked, is it a good deal? Is it a bad deal? 2.6 million. Well, the last round was 4 billion. Again, going back to some of the things that we've discussed, you can never know the details. So you do not know what were the terms of the last investors enter the round. So although the valuation is lower than what was reported, I would assume the investors have very nice liquidation preferences and all kind of mechanisms to make sure that they were happy with the deal and therefore also approved the deal eventually. So here's one example, one line, very discussed about acquisition here in the Israeli landscape, obviously because of the amount and also the persona of some of the founders. Another good example that is slightly different than what you would typically see is CloudShare being acquired by Bull River, a PE fund, a US PE fund. We've been talking about this bucket of buyers for quite some time in the episodes. Here is a good example of an Israeli company being eventually acquired by Bow River. A story about CloudShare, as far as I'm aware, the company's been around for over 10 years. Originally, it actually went through the typical VC route. I believe Sequoia was one of their lead investors. The company grew, but probably not to the extent that was interesting enough to continue in the venture path. So at some point, if I recall, the founders created some kind of an LBO, leverage buyout, where they acquired back the company from the existing investors and then continued and ran it independently by themselves to the point where they felt the company is in a good position to be eventually acquired by a PE in order to do something perhaps larger with the entity or the unit. Again, we don't know what the plans of Bow River about CloudShare. Is it going to merge it with other operations they have, or will they create around CloudShare the operations they want? But yet again, here's a very good example of not a typical journey for a company where they just raise money from VCs and then eventually a strategic comes and buy them, but rather, we're in the VC route. They eventually pulled out of it, continued, were very persevered in their entrepreneurial journey. So congrats to the founders, eventually to get to the point where, they partner with a PE in order to scale the company further. So I think that's also very interesting.
No, I think that's all great. And I really think the other bucket here that we're looking at is the undisclosed deal sizes that continue to pop up, right? And I think it's a good reference to take a look at and say, like, why are these deals not disclosing the deal size? Is it because they're just under 10 million, or is there another reason?
Yep. So I don't know if you remember, we had an episode with Sim about disclosure of prices in an M&A, and obviously you being an expert in communications, there is reasonings on when to disclose and when not. At the end of the day, legally talking, there is only one scenario where you're obliged to disclose the amount
as a private company.
Okay, so the scenario is when the acquirer is a public company. When the acquirer is obviously if the acquiree is also a public company, then it's a different story. But none of the cases are there, and it's less common. But when the company that acquires the company is publicly trading, then according to different regulations in the US specifically, they need to report the amount of their transaction if the amount is larger than 2% of their enterprise value at the day of trade. So again, just to give an understanding, if it's an Apple that is currently trading at $2 trillion, 2% of that, we're talking about $4 billion, that they need to report. So anything.
Yeah. So for like mega acquirers, like mega deals is the only thing they have to report. Otherwise, it's up to them if, it serves their interest or not. Yeah.
And then the question is, when do you still report, even if you're not obliged? So even private buying private, etc. And I think Sam had very good arguments. I think at the end of the day, there is also the narrative and storytelling around the acquisition.
For the founders themselves, actually, they want to get out there and say that they got acquired and
True. So for everybody around the table, the founders, the buyer, etc. And then we go back to the talks of reported valuations of deals, right? So I could see at least 2 deals here. Again, I'm not going to mention the names, but I could see at least 2 deals here that the sum that was reported in the news, pretty certain, or I know the amounts eventually were significantly less. But yet again, the question is, what do they report about? Do they also include the retention and the earnouts and whatnot? So eventually, perhaps the real number could be close to what they report, but the transaction value is lower than what they report. But yet again, why do you do that? It's all about the narrative, both the buyer and the seller. So I think that's also a very good example. And I think also one thing I could see several deals here. Let's take, for instance, Torque, acquiring Revrod. It's somewhere in the range, anywhere between, up to $50 million. Obviously the amount wasn't really disclosed. It was disclosed a few hundreds of million. At the end of the day, we can also try and extrapolate or think, is it pure cash deal? Is it also a combination of cash and equity of the acquirer company? I think think in this case, yet again, I'm pretty certain it was some kind of a combination between cash and equity of Torque, which is also a different type of acquisition, or different, not type of acquisition, different type of structure to the deal that we've been talking about in the past. And why would somebody opt for that option? So again, depends on which lens and which eyes you look for. But in the eyes of the investors, by the way, if it's a pure cash deal, at the end of the day, that's it. The journey is over. They get back their investment with the premiums that they're doing. That's it. While if the part of the deal is also to get the shares of the acquirer, so in this case, Torque, you can also go back to your own investors, to your LPs, and say, oh, by the way, we did a good deal. And also the dream is alive. We still believe we're going to make more because of Torque and its shares going up. So this just the eyes of the institutional investors, but then also take into consideration the buyer and the seller. For the seller, the founders, yet again, it's an opportunity to, at the end of the day, accumulate more value after the transaction. And from the buyer's standpoint, it's a way for them to use the two different types of currencies that they have, which is cash on the one hand and equity on the other hand. So that's also a very good example of different structures of deals that we've been talking about.
One thing that sticks out to me is that, we look at the deal values, but one thing that sticks out to me is like the number of deals, which is 23. We're 5 months in, 5 months in a week, whatever. If you look at last year, there were 47 deals. If you only look at M&A, I guess you could argue that you're kind of like on pace, but still, like, it is a little bit concerning, right? You're looking at only 23 deals in 5 months.
Yeah,
What do you
so
think
really
about that in terms of
so very, very good
momentum?
question. I think at the end of the day, when you value a market in its attractiveness from an M&A standpoint, you can take a look at two different factors. One is the amount of deals happening, how vibrant it is, but also, and that's a big also, you need to take into consideration the total amount of the deals being made. So the value, the absolute value.
Yeah, well, you can look at the value. The thing about the value is the thing that's concerning, because if you compare to M&A only, right, 12.6 billion last year, and then looking at this, if you include the next deal, which is an outlier still, I'm excluding Wiz because you can't have that. Like, you just can't excuse everything, right? You're looking at 1.5 billion disclosed, plus the next insurance deal gets you to 4.1 billion. So you're really only at a third of the deal value if you exclude Wiz, and you're halfway through the year. So is that concerning for you?
No, not really. First of all, I don't want to exclude Wiz. I think Wiz, obviously, that's the biggest elephant here in the room, which I didn't even talk about. And that's, I think there was hours of commentating about this deal somewhere around the globe. I think it's not fair to exclude Wiz and Google. I think that's pretty much quintessential, the Israeli tech scene for the past 20 years. Yes, I think the Google and Wiz.
So you're saying the mega deals are a feature? You're saying mega deals are a feature, and don't try to exclude them?
Every year,
they're part of it?
I think every year we see at least one mega deal. Again, this was
We had a couple last year also,
yeah, this is a mega deal, right? That's something unheard of. But yet again, even last year we saw a couple of billion plus deals happening that really, umped up the amount. And again, going back to the episode that we had with Modi about can we create those 10, 20, $30 billion companies, both as private or public? So public, we already proved, right, in the past, and we have good examples. I think now it's the first time we see an example where a private company in Israel could reach those heights of 10, 20, in this case, 20, 30 plus billion dollars. And I think hopefully we'll see more and more of those happening. Also, perhaps one thing to note, because it's very connected, a lot of the acquisitions we see, the smaller acquisitions, the targets are, let's call it AI-driven companies, right, with AI expertise. So again, it's not a big surprise to me that a lot of the acquirers, the larger companies, are buying those companies for their expertise, their knowledge, whatnot. But going back to the mega deals, I think with the new movement of AI, we will start seeing more and more companies in Israel with less capital needed, reaching huge valuations eventually and transactions.
Nice. We've been talking a lot about different types of acquirers, and I actually would really love to look at who is actually buying these companies in 2025. I was surprised. I looked at the data that we pulled. You actually have, of the 23 deals that we saw this year so far, 2 of them were private equity buyers, 10 of them were strategic acquirers. And when we say that, we're saying like large multinational corporations, usually from outside of Israel, not startups, but actually startups. There were 11 acquisitions that were startup on startup M&A. Of course, you could, say Armis, HiBob, these are large growth stage, but they're still startups. So we put them in there. But you also see a few smaller players coming out and doing smaller deals. So does that surprise you to see that kind of a breakdown?
So no, it does not. And I actually
Does anything surprise you, Zeevi? Is there like anything that could shock or surprise you at this point in your career?
I think by the way, just to be precise, I think the term we will start using it is more scale ups rather than startup on startup, because Yotpo and
Not all of these
HiBob
are
and
scale ups though, right?
I would say 90%. So, and also just on the flip side, what's interesting is the green that you see here, these are all Israeli companies. So that's also very interesting. It's not just about the size of companies, but it's also Israeli companies buying other Israeli companies, which to me is an amazing testament of the strength of the ecosystem that we have here. 10 years ago, we would rarely see things like this, and now we see it much, 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 much more common. On the other hand, I see channel here on the pinkish, which from a size standpoint is pretty, I would put it more on the green side, but yet again, it's an American company. I agree that so again, I think maybe perhaps for next time, we'll also make the distinction about the geographical element, who's buying
Yeah,
who,
that's
but also,
interesting. I wasn't thinking about it that way. Yeah, it's really impressive to see the number of Israeli scale-ups that have reached the point where they can actually go out and pursue inorganic growth in that way. And I think
yep,
that is definitely what you're saying. What Modi was talking about, what a few of our guests have talked about is the potential of the Israeli ecosystem to really create long-term value and not
yep.
just build to sell. So I think that's pretty cool as well. Zevi, any final thoughts? I talk about why private equity is still so tame and, not really making a lot of moves in our market.
Again, I think that the model of private equities is pretty unique and therefore requires a very specific type of targets that they're looking for,
Which is?
which is first and foremost, they're looking for companies that are EBITDA positive, so that are
Good
generating
luck.
revenues and not losing money every month. So I think that's criteria number one. If you think about it, if you go with the VC route, the more venture route, historically that was less of a focus for you as a company. I think since 2022 we start seeing a shift even in the venture-backed companies that are at least attempting getting cash flow positive, etc., which then does open the door for them to be acquired by PEs. I think that's one. But second is also about the maturity and the stage. Again, if you go on the large scale PEs, they're looking for certain matrices of revenues, etc., for them to be interested in looking into the opportunity. While smaller PEs, they're looking for a different amount or size of revenues a company is generating. But then again, going back to a meats episode, those smaller type PEs, they're less present here in the local Israeli market because they're focusing more on their own local geographies, the UK, the US, etc. So this is why, if we see a PE deal, it's normally by one of the big ones, and they're buying the big guys here in Israel. The Bow River and CloudShare is actually an example of a smaller PE buying relatively a smaller size company, but yet again, the story of CloudShare by itself was pretty unique. So hopefully with AI and everything that we see, we'll start seeing more PEs also involved here in the Israeli market, because I think the mechanisms and the financials of the companies will fit way better their model going forward.
Great. Maybe we can get some PEs to come and talk to us on the show or on the deal room on the comment. What are
Perhaps.
we going to call this thing? Great. Thank you for tuning in. This has been a very transactional episode of the Deal Room by your besties at the Endgame, Israel's Tech M&A podcast. Please subscribe wherever you get your podcasts, follow us on LinkedIn, and let us know what you thought about this new format. We'll be back next month looking at any deals that scraped by in May. Let's see, May is halfway done, so we need to
May,
hope that
June,
there
I
will
don't
be a
know.
couple
Perhaps.
more deals.
Yeah, perhaps we'll do May, June together. Yeah.
No, let's hope for the best here. And this is great. So thank you, Zevi, and we'll see you guys next time.